Welcome to the Commercial Property Podcast. My name is Suzi Carter. I am a chartered surveyor. I've been involved in commercial property in the UK for 30 years and I've done hundreds of commercial property deals. I'm here to be your guide through the commercial property market, whether you're an experienced investor or whether you're literally thinking about dipping your toe in the world of commercial real estate. I will be here talking to you about all kinds of things commercial real estate in the UK, and I've also got some fantastic guest experts who are joining me. So please do subscribe if you'd like to follow, and if you'd like any more help or information on commercial real estate, please do click www.suzicarter.com, which is my website, and you can find out all the ways I can help you. So stay tuned for this week's episode. Welcome back to the Commercial Property Podcast, and today we're going to be talking about title splitting. So I'm going to be talking about why this is one of my absolute favourite commercial strategies, well actually strategies in any type of property investment. I'm going to talk to you about how you can use title splitting in your investments and kind of why you would want to do that. And this is a strategy that I've probably used most in my investing. It's one of my favourite strategies, and I'm going to explain why that is and how you can literally create value out of thin air by using title splitting. So let me tell you what title splitting is. So in the context that I'm using it's when you buy properties on one title. So that's usually a freehold title. It could be a long leasehold, I suppose, but it usually would be freehold. And you would want to be, through the title splitting strategy, you'll want to be splitting that down into smaller units. Now, the logic behind this is that the sum of the parts is greater than the sum of the whole. So the only reasons you would really want to title split is because the value is higher if you split it into part, is because it's easier to finance and you're going to get better valuations as well, and also easier to sell. So that there's a purpose behind it. You're not just doing it for the sake of it. And an example would be where you have a multi-let commercial site where you split it into different titles, which might be different buildings. You could take a block of flats in the residential world and split them as long as they're over 30 square meters and therefore financeable, or 37 square meters in some markets, but at the moment it's 30 square meters. You can split them down into individual flats and finance them separately, and they would be valued separately, with the logic that actually a large block is valued down because of the block discount, because of the liquidity issues with a large block or a large multi-let site, whereas actually the sum of the parts is so much greater in value terms. And I've done this on entry into properties. So when I've bought an uninterrupted freehold block of commercial or residential property and split it down into logical chunks. And because we've done the title split on entry, then we've basically had a value uplift when we've entered the property. Now, you might not get that reflected straight away in your valuations, but that will be reflected in due course in the values on the property. So it's very, very easy to do this legally. You need a solicitor that understands it. I've dealt with solicitors in the past, and clients have, where they've had solicitors saying it's not possible to do this, and of course it is. So if you have a solicitor like that, I suggest that you would want to change solicitors, because you need somebody who's kind of understands this as a strategy and is open to it.
This episode is brought to you by Bond Finance Limited, your trusted partner for commercial property mortgage solutions. Are you an experienced residential property investor about to diversify into commercial property, looking for funding options? Bond Finance can help. Whether you're planning to expand, refinance, or make a major property investment, Bond Finance provides expert advice with access to a wide range of lenders, from high street to specialist. Book a free discovery session today to explore how we can tailor commercial funding solutions to your unique investment strategy. Visit www.bondfinanceltd.co.uk and take the next step in your commercial finance journey.
So if you're doing this strategy, say in the residential world, so it might be that you're taking a block of flats, or you might be taking a mixed use property with commercial on the ground floor and residential on the uppers, and say it's got 4 or 5 flats on the uppers, then you would simply be granting long leasehold of each of the flat units. You then approach a broker to get a valuer to come and value each flat individually. And of course, there's a process behind that, how you would do that. You probably get a test valuation done first, and then see where the values lie, and then get each of those on buy-to-let mortgages. And the buy-to-let mortgages tend to be at better rates than a mixed use or a commercial mortgage. So there's definitely a rate difference, potentially a loan to value difference as well. So it's definitely worth, from a finance perspective, looking at this on residential and mixed use. With commercial, then the liquidity of a multi-let block could be actually much less than the liquidity of individual units, which might be bought by owner occupiers or might be bought by individual investors. Say there's a block worth 2.5 million, a multi-let site worth 2.5 million. Each part of it is worth, rather than 250, there's 10 units, rather than 250, might be worth 275 or 300, because they're just much more liquid. So you tend to find that the sum of the whole is less than the sum of the parts. So you will approach lenders on a different basis, a different type of valuation, and you'll tend to find that they come out higher. So as I say, you can do title splitting on entry. If it's commercial property, you can split it into individual freeholds. You don't have to create long leaseholds. On residential, to be financeable, you probably want to be creating long leasehold units. That's what the banks will want to see. So, but on commercial, you can create freeholds unless there is a service charge, in which case you may want to create long leaseholds so that you've got obligations on each of the owners or the occupiers to pay a service charge. So you'd have to just take some advice on the individual circumstances for that. And when I've done, when I've bought I bought probably about 5 years ago, bought a mixed use property, which had a mix of residential and commercial on site and a development site as well. It was all on one title. So the liquidity of selling that out again would have been difficult. There's very few people that would be in the market for that whole asset. And also the financeability, everything would have had to be on commercial mortgages. And that would have been problematic in terms of rates, in terms of values as well. So we split everything out into individual titles. Now, sometimes this stuff's not easy. Sometimes you have problems with the land registry, with solicitors and various, kind of other key stakeholders. But believe me, it is worth it, because the value increase you get and the value increase that we got from this particular site by doing this, it is significant. So you want to make sure that you kind of are very strategic, and you start with the end in mind. So when you start with the end in mind, what I mean by that is that you take all the advice you need up front to determine what strategy you're going to do, because there's actually no point title splitting where there's going to be no benefit for you. So you definitely need to talk to a broker about the financeability of the property as a whole and individually, about the valuation approach, which they should be able to advise on really easily, and about kind of the different exits that you can look at. You definitely want to speak to a surveyor or about the leases and how you would work those through, and solicitors, obviously, to execute the long leasehold or the title split and or the title split. And remember, if you do split between freehold and leasehold, you will need to hold the leaseholds in a different company than you hold the freeholds. You can't hold leaseholds and freeholds in the same company. You have to hold them in different companies. So you might want to set up some kind of holding holding company structure or other structures that your accountants advise. So definitely speak to accountants about this, because the way you structure it can be really important. And also you're going to want to get stamp duty advice as well. But title splitting, it can be it's something that a lot of investors dismiss. And I've got a lot of clients at the moment looking at mixed use properties, and mixed use properties where there might be commercial on the ground floor with already converted flats above. Not what we're not talking about here is actually doing residential conversions on uppers. Actually, this is space where it's been done already. And what's really important is the flat sizes. So they've got to be over 30 square meters to be mortgageable. And the fact that they can be split out, and the value increase is substantial. These kind of deals work on mixed use properties where you can get the whole property for a similar price to the gross development value or the GDV of the uppers. That's where the sweet spot of these types of deals are, because effectively over time you are getting the commercial in, if not for free, at a much reduced price. And of course, I've mentioned liquidity a few times, but one of the real benefits of this strategy is that you can sell out part, or, you can hold part unencumbered. You can have debt on part. And I've got clients who might be buying flats above shops and might just need to sell one flat or two flats in a block above a shop to basically get the rest as an all money out deal. And so it's a really elegant way of adding value very, very quickly when you buy a commercial property. And I think it's something that a lot of investors don't know about, and it can be used to great effect by combining it with other strategies as well. So, say you've got a property where there's other asset management to do, like, for example, letting a vacant unit or extending a lease or taking a lease surrender or restructuring, or, kind of all that kind of good stuff that we do in the commercial world. A title split can just be a really good way of adding value up front. It can also facilitate those type of strategies. So, for example, if you subdivide a commercial unit into different parts, hold them on different titles after you've bought them, and then you do some asset management on one, you might want to refinance that before you refinance other parts of the property. Because you've yet to do the asset management on those, and it's a way of kind of getting your money out and kind of refinancing as you go, rather than having to lump everything in together. So it can be really beneficial in so many different ways. And if you're buying a big block of residential, I know this is a commercial property podcast, but I will just mention this because these blocks of flats are very quasi-type residential valuations, etc., if you buy them as a whole. So what you tend to find is that there's blocks of unencumbered, well, not necessarily unencumbered, but unbroken freeholds of flats that they, as I say, they do need to be over 30 square meters or 37 square meters in different financing markets. And with the Renters Reform Bill, you may want them to be in decent condition, so because you won't be able to get tenants out to do refurbs. But effectively, with the logic that the sum of the parts is greater than the sum of the whole, upon entry, as long as you buy at the right price, the gain you will get by valuing each flat individually and putting them on either different mortgage products potentially could be greater than the price that you buy the block for. So the sum of the parts could be significantly greater than the sum of the whole. And I've got clients doing deals like this where literally the only money they're having to put into these deals are stamp duty and fees, because they are getting all their money out on day one by doing a title split. And this is just as relevant, as I said, on commercial properties where you might have mixed use, where you might have multi-let units. So there's lots of good stuff that you can do, where you can do this. And last week on the Commercial Property Podcast, we talked about owner-occupiers. And this could be combined with that strategy. So if you wanted to hold part, maybe sell part to an owner-occupier, then again, you could title split the property, subdivide, say, and take an industrial unit where the values and the rents are going to be greater subdivided than as a whole. So in that you would have to subdivide services, you'd have to create proper subdivided units physically, but then you can do the paper exercise of title splitting these units, keep part, and then sell out part to owner occupiers or other investors as well. So, you don't have to always hold assets. Obviously, kind of selling part or even selling whole at greater values, like as a trading model, can also work really, really well. But even if you do hold the properties and you hold them as investments, the valuations you're going to get further down the line by them being valued as part rather than as part of a larger block of freehold units can often be significant. So title splitting is a strategy that I is definitely worth having up your sleeve. It's one of those kind of strategies that you have in your arsenal that you can draw on as part of a wider asset management plan, as part of a wider purchasing plan. But please don't forget about it, because genuinely, I've seen so much value added by doing this strategy, and I've done it many times over myself. It's one of the first things I look at now when I look at unbroken blocks or multi-let blocks or mixed use. Is it possible to do a title split? And if so, where's the valuation difference? Sometimes it's not worth doing. Sometimes the valuation difference isn't great enough. Sometimes the value of the whole, for some reason, is greater, just because of tenant demand or investor demand. And of course, you need to take horses for courses. So speak to agents, speak to surveyors, and speak to solicitors to get some advice on that. But title splitting is definitely a strategy to have up your sleeve as part of your asset management of commercial property.